Hi, this is Dave and welcome to the weekly market recap, closing out the week for Friday, October the 11th, 2013. So I'm just going to expand out the Dow chart here, the daily chart, and just wanted to wish everybody a happy and safe Thanksgiving long weekend. I hope you have a great time away from the screens and some time to spend with your family. So let's just dive into this video and let's try to be fairly efficient here. So looking at the Dow futures on the daily chart, essentially what we had here was I was looking for a bottom. I felt that we were close to a bottom back in this area here, and talking to some of my members here at the trading room, I was expressing that I think that I was really itching to get in the market here, but knowing that we're probably going to get a flush out. So I believe that this was the flush out, and then you can see we came into some longer term support. If you look at some of these levels, I may flip over to the weekly chart, but these were some long-term weekly level support, and we were getting close to a bottoming and momentum. So this was looking like an area, an interesting area, an attractive area, looking to see if we would catch a bid here. What really caught me by surprise, though, was the ferocity of the move off of that potential low. So I was saying, okay, I think we have a potential low here, but I was waiting for some confirming signals, and then all of a sudden we ripped to the high side, and then the next day I was looking for a 50% pullback of this bar on Friday, and then we just pushed higher. So when this kind of stuff happens, it's really difficult. It's difficult to get in the move after this kind of. I apologize. I just had to pause the video. I didn't want to sneeze into the microphone there. As I was saying, though, it's really difficult to, if you miss the move, you're anticipating it, but you still miss it. It's really hard to jump into the market after two straight humongous up bars. So if we look at where the Dow is at this point in time, and we're looking for potential resistance. Now we're right into a 50% retracement zone from this high to this low, and now we're coming into this zone here, which is potential resistance between the 618 and the 50%. So at this point in time, what I'm looking for is a change in market structure, and I'm looking for it to come up into somewhere into this area. Let me just change the pen to blue. I'm looking for it to come into this area, somewhere in this zone. I'm looking for a short-term failure. I'm looking for it to pull back, and I'm looking for it to put in a higher low. That's specifically what I'm going to be looking for. And then once it does that and maybe comes back and retests, I'm thinking that higher low might come in somewhere around this level here, 14,850. That's where I would be looking to potentially look to see if it will catch a bid and continue up back to the high side to retest those highs, and then eventually to break to new highs. That's what I'm anticipating. That's what I'm looking for. It doesn't make sense that the market is going to move higher, but from a historical seasonal perspective, usually the market finds a bottom somewhere in October and it moves higher somewhere into, and don't quote me on this, but somewhere into June, July, August, somewhere in and around there. So that's sort of what I'm looking for. I think we may have put in a short-term bottom, and this price action here on accelerated or higher volume, I think it really says a lot. You have a momentum shift here on the daily chart, has finally confirmed. So I like this action. I like that we put in a potential bottom. We broke this trend line. There's a lot of good things going here, but now after two big up days, we're entering into a zone of potential resistance. So that's what I'd be looking for. So wherever we find a high in here, another thing that I'm going to be looking for, let's say we find a high at this 618. What I'm going to be looking for is, if you look at, let's say we find a high at that 618, where the retracement is going to come in for a potential long. So I'm going to be looking at that on from a number of different perspectives. Once and if we can find some resistance and pull back. I don't like to buy when the market's shooting straight up. I want to see the pullback. I want to see us find support. and that's what I'll be looking for. I admittedly missed this bottom, even though I was, talking that I think we're getting close to a bottom. I totally missed the move, and even after this big update, I was expecting it to retrace 50% of this move, and that's where I was looking to get in on a swing trading basis, and I just missed it. Frustrating, but it happens. So let's just jump over to the S&P futures, and so we had this move play out. It's interesting how we came right down to the 78.6% retracement, almost to the tick, and then we pushed off. You can see we broke that trend line. A retest of these highs around 1725 looks like it's in play, but we're also entering into an area of intermediate resistance there. We could just push through it, but that's sort of how I look at the markets. So same analysis as on the Dow. NASDAQ looks really strong. Same analysis. We're breaking this intermediate trend line here. So the stock indices are looking really interesting. And that's all I really have on that. If I just add one other point, if we look at the, for example, if we look at the weekly chart, we've been talking about this for the last couple of videos, and we were looking at potential support at the 21 EMA, which is this this white line here. And then we were looking for ultimate support at these lows, and that's actually where we came down to. We came down to these lows. Now we're pushing back off. According to this Darvas squeeze methodology that I've been sort of looking at developing over the last couple of years, if we come back through this high, we have the potential all the way up to 16,400. According to this methodology, according to this technical indicator. So I like this, and to me this is just a matter of where can I get into this move for my, in my opinion, where can I get into this move safely without getting shaken out of the move so that I can ride the majority of this move. So I hope that makes sense. That's kind of what I'm looking at here, over the next 3 to 4 months. It's not going to be a straight line up, but at some point I'm looking to peg that target. So it sounds crazy, I know, but there's a historical basis for, my belief in this. And that's how I feel, and I'm sticking to it. That is a 1 minute chart. Let me just jump back to the, okay, the brain doesn't work as well on Saturday. So now we're back to the traditional charts. Okay, let's take a look at the dollar index. So the dollar index caught a bid this week, and we came right back into resistance. And now we're stuck in between the 8-period moving average and the 21 exponential moving average. We're right at a pretty clean and clear resistance level, which is the breakdown of this previous support level. You can see we broke it with the wide range bar. We came right back into it, and we're coming down. So we have short-term or intermediate positive momentum, but we are still net negative trading underneath these falling moving averages. And until and if we can break above clearly $80, or I'm sorry, 80, let's call it 80.88, then I'm net negative on the dollar index, okay? I think that's really the line in the sand. That's where, things will inflect between long and short on the dollar index. If we look at the euro is holding support. We're above this trend line, and, we've had a minor pullback. From a long-term perspective, we were looking potentially for a retest of these highs at 137.13. We got as high as, let's see here, we got as high as 136.38. We're still above support. We've got falling momentum, but we're still above support. As long as we hold this trend line, in the short term, as long as we hold the 21 exponential moving average, which is this white line, but ultimately, as long as we hold this trend line, I believe we have the potential to push into 137-ish. So that looks, that looks interesting. I'm not really interested in trading it, but let's look at another currency. But that's sort of what I'm looking at. The USD CAD. The USD CAD from this high to this low came into its 618 resistance, and it has since pulled back. I don't have a clear picture on what this is doing. When I see that, we're failing to put in a higher high, to me that looks negative, but we're still holding support. So at this point in time, I think $1.04. If we stay below $1.04, then I'm negative on the, I have a negative bias on the USD CAD, You can see momentum is topping here right into that level. So I would expect probably intermediate lower prices here. If we can hold $1.108, that would be great. If we can hold this support level, if you could hear that in the background, that's just Pistachio, my Boston Terrier's in at the office with me. They make a little bit of noise from time to time. So, if we can hold $1.01, let's call it $1.50. I think that's where the major support is going to come in at this point in time. So I'm just going to mark this with a stronger level. Let's make it a little bit heavier. I'm going to mark that with a stronger level. I think that's really going to be the line in the sand there for the USD CAD. If we can get above $1.04, then I'd get positive again on the USD CAD. So let's move on to some of the energies. Let's look at natural gas. So natural gas, I believe, don't quote me on this, but I believe we're entering into a period of seasonal strength where the producers or the commercials, where they're really accumulating for the heating season. They're accumulating for storage. Now I'm not a big fundamental guy, so the fundamental story and the seasonal story is that's my understanding. I don't know the exact dates, but that you can easily look that up on timingthemarket.ca and equityclock.com. But if you look at this, I mean, we've got a couple of key levels in play. We've held the 325 level. That's the major support, and you can see here $3.52. We clustered around there. We built a decent base. We had a momentum shift off of that level. We came into 370. We've cleared that level. Now we're into 378. We're entering into an area where we've got potential trendline resistance, and I believe that trend line is essentially, if we clear that trend line, I believe we're really going to go net bullish on natural gas, but we are entering into an area of toppy momentum. So we've got some decent market structure in here where you've got a low, and then you've got a higher low in place. So this is looking good. If we can break this trend line, and we can clear $3.78, then I think we have the potential for some for a retest of some of these higher levels, all the way into maybe even $4.27. That's getting probably a little bit speculative, but you've got some constructive action going on this chart, and you're building this sort of triangle in here as well. So if we can get a break of that trend line, then I'd be looking at 392, 427. So that's kind of what I'm looking at. MACD is holding zero line support and crossing back to the high side. That looks constructive. So it all looks constructive here. If you put the decision to me, I would probably say I am definitely more bullish than bearish on natural gas at this point in time while this scenario exists. Let's take a look at crude oil. Crude oil has been really sloppy, but it seems to be holding in some of these levels in here around $1.02. I don't really have a lot on it. I think in order to get bullish on it again, I think we really need to clear that trend line. So at this point in time, we're holding in some support levels. You can see we're building some constructive momentum here on the slow stochastics. The MACD is a little bit less telling. It's below its zero line. It's more negative. So I think this is really a key level. I'm going to mark this with a little bit more prominence. $1.02 I think is really the key level. If we can hold, $102 a barrel. If we can hold that level and push back up above here, that would put me on the positive side. At this point in time, we're really just in no man's land, so not much to do there. Let's see. Let's take a look at some metals. Let's take a look at the gold futures. So gold futures have really turned negative. We're out of the period of seasonal strength in gold. The period of seasonal strength, I believe, ended at the beginning of October, and you can see here that 1282 was kind of my line in the sand in order to hold support there. Now that we've broken that support level pretty decisively, I think that we've got the potential to retest 1178. And we're at an intermediate support level around 1265-ish. just above it around, we closed around 1268.20. But, you know, I think failing that, failing 1280, 1265, I think, you know, that could bring us all the way down. You know, if we fail this level, that's really going to open up the door for this, a retest of that low around 1178. And then, you know, we could come all the way down if we fail that level down to anywhere between $1,000 and $1,100 per ounce. So if you're trading gold on the long side, be very careful. Establish your risk and stick to your risk parameters, in my opinion, because it will rip your head off. I've seen it happen, and it's scary, and it can move, you know, 30 to 80 points in a day. So just be careful and manage your risk. It is it's a crazy market. It can go momentum on you, and the next thing you know, you just get your head ripped off. So having said that, let's look at the momentum charts for the gold. And okay, so you can see here, let me just refresh this. Okay, let me just refresh this. If we look at the GLD, we fired on the daily chart a recent short Darvis squeeze. So if you look at the GLD, you know, this the break of this low is fired a short with a retest of 119 in the GLD. It's now trading 123. That is a valid short signal. Let's take a look at the gold futures. I like to take my cues off of the gold futures. Let's just see here. Yes. So if we look at the daily chart of the Darvis squeeze, we've got a short at 1276 with a short target of 1222. This is a valid signal. Now that I see this, I'm really, you know, I'm really more bearish than bullish on the gold. This is a valid signal. I've used this methodology for a while. It doesn't always work out, just like anything else, but when I see all these factors come into play, like you've got red Hakanashis, you've got MACD below zero, declining momentum, and you have this is a momentum market. This setup tends to work better with momentum type of instruments, and you know, this is really cautionary. So be really careful if you're on the long side of gold, and you know, establish your risk. And you know, we've got short signals there. So let me just jump back to the more traditional charts. Let me take a look at silver and see if that's corroborating. So silver is setting up an interesting triangle pattern here by the looks of it. Let me just clean this up a little bit. Okay, so we've got an interesting triangle pattern here. We're holding support, but you can see here, see the distance between this low, this test of the trend line, this test of the trend line, this shorter test of the trend line. It's kind of like, you know, you've got this jump, that jump, that jump. You know, you might see something like that. So this pen should actually be red, but I mean, this is, when you see this kind of situation here, be really cautious. This is starting to set up to look like a potential short triangle breakout here on the silver, and that would corroborate what's going on in gold if that takes place. If you look at actually the copper actually fired a short signal in terms of a triangle breakout, and it is now just coming back up. See how it broke out? Let me just grab a pen here. See how it broke out of the triangle, and it's coming back up to retest, and you can see the 8 is crossing the 8 period exponential moving average, which is that yellow line, is crossing below the 21 exponential moving average, which is that white line. You can see that that is negative. It's a negative crossover, and if you can get, you know, it's not uncommon to do this, snap back. If it follows through and breaks that low, then you're really going to get, you know, the rubber's really going to meet the road for a retest down to some of these lows around $3.08. So watch the copper. The copper, I believe, has been leading the metals. Keep an eye on it, and that should give you an idea of what the other metals, you know, might be fixing to do. So let's take a look at, let's see, the 30-year. You know what, I really need to clean up these charts. I apologize. I'm going to go through all these charts one day and just clean everything up. So the 30-year is just holding support, and it's just really sideways. You've got this sort of double bottom in play, and now you're just sideways. I don't really have a lot on this, to be honest with you, so I'm going to move on. Let's look at the 10-year. 10-year looks the same. It looks, you know, it looks like like when you see this kind of action and it puts in a low, a bottom, a bottom, a bottom, and then it breaks a trend line, to me what it looks like it's setting up to do is this sort of scenario here, you know, where it might do this and do that. So I'd be looking to drop some fibs on here from this low to this high and see where it might pull back to. See if we can get momentum bottoming out at the same time. If we can find support into the fib levels and then push off to the high side. So let's do that. Let's just throw some fibs on here and see what we get. So you've got this low. Oops. Sorry, let me just redo this. Let me just delete that. Let me just reposition this chart because I can't actually see the low. Okay, let's grab the fibs. This low, that high. Okay, the 618, the 50 and the 618 brings you right back for a retest of this sort of breakout level and this pretty key support level. So I think that a move into right into this zone here, it's not a clean level, it's a zone, would be interesting. And if we get momentum bottoming around there and then rolling back up to the high side, this would be an interesting point for a, in my opinion, for a long bond trade. So that's kind of what I'm looking at. That's what looks interesting to me. That's sort of where my eye's gravitating towards. So I think we've covered most of the major markets. I'll just take a look at a couple of quick stocks. Let's take a look at Google. You know, with the strong action that we've had in the stock indices, and we've had, you know, some strong action in some stocks, but if you look at like Google, to me Google looks like it might not be a leader anymore. You know, when you look at the action in the broad market, and there might be a rotation. I haven't really studied this, but to me it seems like there's a rotation out of some of the previous leaders into some new leaders. So we'd have to look at, you know, what is really leading the market from a relative strength perspective, not from an RSI perspective, but a relative strength perspective. You know, an instrument vis-a-vis the broad market like the S&P 500. To me, Google, you know, had a pretty meh move compared to the stock indices. And if you look at Apple, you know, Apple moved, but compared to, you know, like look at Apple here, it looks like, you know, it's firing, it's breaking above this trend line. Actually, I'm going to redraw the trend line there. If you look at the move in Apple, right, and then compare this to the Dow futures, and look at the move in the Dow, like boom, boom, two big up bars, and then look at the move in Apple. Okay, that was nothing. You know, it was nothing. To me, this doesn't look like Apple's leading anymore. If you look at the NASDAQ futures, look at the move in the NASDAQ futures. You know what I mean? So there must be stocks that have moved a lot more than that. I haven't really studied to see which they are, but if you're going to look at trading things, in my opinion, look for the you know, if you believe that we're now, you know, ready to move higher, look for the stronger stocks, look for the new leaders, because I think the old leaders are kind of tired and played out. And, you know, that like those stocks to me don't really look that interesting anymore. I'm just trying to think if there's any markets I had not covered. We covered, you know, the metals, energies. We covered the stock indices. We covered some key currencies. I think that's it. So I'm going to wrap up this video. And I just want to reiterate, have a great Thanksgiving weekend. Have a great long weekend and be safe. And take some time away from the screens. Spend some time with your family. I'll be doing the same. We'll look forward to seeing you at the next video update. And I'll keep you posted on some upcoming events that are shaping up that are going to be really, really interesting. The last few events that we've had, we just had a recent CSTA Oakville chapter meeting this past Wednesday. Fantastic turnout. I think we had about 35 people there. And just great energy, great speaker. We had David Cox from CIBC Wood Gundy speaking about, you know, how he looks at the markets and how he manages risk and how he the theme this year with the CST Oakville chapter for this season is you know, trading and investing plan development considerations. So we're looking at things like you know, we're bringing in some people who are really walking the walk, talking the talk, and, you know, how do they manage risk? How, you know, some of the mistakes that they made, how they've rectified those mistakes, and, you know, how they kind of approach the markets and how they manage, you know, money management, risk management, Obviously some key technical analysis things that they look at, techniques and such, but also how they approach the markets from a trading plan, investing plan perspective. They're not just going to hand you a trading or investing plan, but they're going to sort of share with you some of the struggles and triumphs that they've gone through and the things they've learned and the key considerations for putting your own plan together, things that you should consider in doing that. So again, happy long weekend, and we will look forward to seeing you at the next update. All the best.